What's going on, guys? I'm doing a global macro update. Nice volatility today. Um, just went and did another trade here in S&Ps. I guess let's start there. That's kind of what's U.S. equities is pretty much driving global macro right now. Um, so we've been pretty bearish overall coming into the fourth quarter. We still think, our best call was October. You're going to see vol come back into the market. Today, you're certainly getting more of that. We've traded as low as a 17 handle on the front month VIX. The way I kind of like to trade it because VIX futures will take up a lot of your buying power. So I try to short S&Ps first, and then if S&Ps gives me even better levels, then a lot of times I'll go to the VIX. If you bought deep here, 17 back towards pi, this is the chart. That's a pretty good location. This morning we had another good dip also right in line with this backup to pi on it's the 200 on the 15 minute. I'm pretty sure it was pi on the 5 minute, yeah. So cyclically we moved down. We covered some stuff well this morning. We trade live together Tuesdays and Thursdays, my team, and then we had a little bit of a rally back here into pi, reshort, bought some SPY puts. And that was 1030. That was right here, and that was a great spot to get long. So if you pick a spot, for example, if you reshort S&Ps here and then market backs up to you another 10 handles, then I go buy the VIX. That way I'm not too heavy too early, and then I'll try to add in the direction of the VIX. So typically, if it's moving in my favor, the buying power is a little bit more favorable. So you add and then look for another spot to add and come out of some. We had nice sales last week into the 24 level. I sold pretty much the high in the parking lot on the mobile. And now down here is the time to start thinking long again. It was kind of the same timing on S&Ps. What we did, we broke this flag. I have my normal annotation tool, but there's a small flag here. I'm sure every technician had, right? The market went sideways base. We broke out of that and two off on the retrace of this move down, which we did about a 50% retrace. And so this was the spot to be short. Now, from a timing perspective, when we broke here, that set in another wall that we talked about in our group this morning. And then the market held here 50% of that wall. So there's always these little what we call wall concepts that we're playing. And the fact that the market held there, the risk was that if we traded above yesterday's high, then that you could test the underside of this major 2865 level that broke. So that was the trigger on the up. And it depends how you play it. I mean, I was shorting here on this bounce. So had we traded above the high right here, then I would have taken some risk off and looked to get even heavier towards, again, 2865. Pi was up there. But now that we broke the 50% retrace of yesterday, now the signposts are pointing to a retest of the low end of the range, 2700. And you can't rule out a new lower low. You cannot rule out a lower low. The fact that we bounced to a lower high, all right, this daily cycle can roll back over. The 4 hour already rolled over. I'm kind of thinking a retest here. This is first support, 2750. And then this is the trend line, and pi is down here. And then the support, obviously, from the low from the 11th. And there's different ways to trade it, but on rallies, we're better sellers. So you sell futures. We've been buying puts on the SPY. I came out of some 277 puts we took profit on, 275 puts I took profit on, 280 puts I bought this morning. So had a nice day. It was like a $4,000 move in options, $4,000 day in futures. So it's more of the same game plan. We're looking for risk off here the fourth quarter, and maybe even in the first quarter. You're going to expect a lot more volatility. You do not want to be long the stuff that worked the last 2 years, the high beta tech. Now that growth might go from great to good, that's slowing on the margin. But you can see that pretty much tech has been underperforming. If you look at something like utilities, talked about the 50% retrace on technology here yesterday. Said we're either going to fail here with the 4 hour, or it's this daily cycle is going to continue up. It looks like the 4 hour won out. And then we're making lower lows again. So I expect tech to be back here again to retest these lows from the 11th. Going around the world, we covered 10s well. So we were playing a flattener, a small flattener, nothing that was really risk weighted. Typically, you're supposed to have, I was playing 10s versus 30s. You're supposed to have twice the amount of the smaller duration bond than the longer term. So I would be short 4 contracts in 10s and long 2 bonds. I was actually really directionally long bonds. I was only short a couple 10-year notes when we had that false breakout in yield, and I stopped out on half, and then I was still long a couple, and I covered those this morning because we've finally had 10s back up. I didn't add to my 30-year position. That would have been kind of aggressive. I guess I was playing a little bit more conservative, but we were selling S&Ps, so I didn't need to feel like I needed to double up. But anyway, bonds rally here too today. So I'm still core long 30s, and now I'm net flat 10s. And I think I'm just going to stay with long 30s. Maybe I'd sell some 10s back here, depending on what S&Ps are doing, like 118.5. But that's only 10 ticks, so I don't know. I think the better place to be short 10s maybe here is 119. These highs, 118.30, 119 the buck, 119.10. We're, again, risk off. I'd rather be looking to buy dips and bonds. So today was another good example. Gold was going sideways. It did short some oil here, just day trade. So made some nice sales up at 72, and I didn't stay with it overnight. Just the Saudi stuff was kind of in the back of my mind. But what a move down today. And then saw this bounce this morning up into the bands. I was a short, covered into 69. Had another little day trade there. I guess then lastly, usually I start with the dollar, and I would say equities and vol risk has really been driving this market. But if growth slows and inflation comes off, like look at what oil is doing, the Fed wants to continue to tighten, and inflation is really going to be coming way off now that oil is back below 70. So you're talking about deceleration or deflation, deceleration in inflation, call it deflation, whatever. The point is that inflation was hot and now it's gone sideways, and now the numbers will be coming down. You can look at the other commodity charts, same thing. And then growth slowing. You want to be long the dollar in that scenario. That's been our call all year, is to be dollar bulls, still core short the euro. You had a kind of a nasty false breakout intraday above 116, ran the stops, came right back off. So I think that, it just is what it is. It barely got above the 200, plugged into it and failed. Now that we took out 115.30, there's some support at 114.5, but I think you're going to be back into a 113 handle. So somewhere back down here, I think, is where we're going to be into the end of the year. So we're better seller of the euro, be kind of the same trade on cable. And then my guys know we've been kind of nibbling on dollar lira down here. I actually bought the low yesterday on my third entry, which was basically 150, was 5.5 right in front here. I was buying inside this tail. And then we had FOMC, but added to it today. Look at that example.